Good evening, everybody, and welcome to the very first public analysis of commodities. Earlier today, I made an analysis in Dutch. It's the same analysis, also on commodities, but simply in Dutch. And this was due to the fact that that's my native language. And I also thought that it would be easier first to explain everything in Dutch so that I'll know quicker what to say in English as well. So for now, the setup would be that I explain a certain topic in Dutch first and afterwards in English. I also think that the best way for you to have an overview of what is explained publicly is to have a video on commodities, a video on Forex, and also a video on cryptos. As of lately, I'm not that active in cryptocurrencies, and the reason for that is due to the choppy price action of Bitcoin. And because of this, the vast majority of the cryptocurrencies are not that attractive to trade simply because they're hugely correlated to Bitcoin. But what I do is that I will check the cryptocurrencies that are not correlated that much with Bitcoin. So as of lately, Tron moved quite differently from Bitcoin, for example, and that's one that I traded as well. And at the beginning of May, I traded GMT and metal a couple of times. Also attractive due to their lack of correlation. If I do come across those cryptos, I will make a video in both languages. But for now, I haven't seen one yet that I find attractive. So as of now, you should probably expect more commodities and Forex videos. Alright, so this is completely focused on commodities. I look at gold first. Gold is one of the commodities that I've made a chart analysis earlier. I shared it on Twitter before under the name CryptoCroc. And these ranges were meant for swing trades. And let me see. On the first side, it's quite a lot of information, quite a lot of lines and all that is visualized. Firstly, the daily, weekly, and monthly levels are charted, as you can see right here. Those levels are of great convenience to understand where price reacts for gold, and in general, rather, this is a very important thing to always have in mind. And as we can see from the end of 2020 until now, we see that gold moves between this level and this monthly level, with the weekly even being at the top, but more or less being a part of the deviation from the range. Let me see. And under this day level, there is a bullish order block that's also developed at the mid of 2020 until now. However, we haven't seen it yet go back to this order block in 2022. But the idea is, as you can see on the weekly, this is a very convincing order block. Price moved away here after this down candle and tapped a couple of times already, 3 times, and here even a few weeks consecutively. Normally, if an order block is tapped into it a couple of times, it becomes weaker, and then the probability that it taps again like this, so it taps and moves away, will be smaller. But it's still something that I keep in regard, still something I keep in mind, and also want to potentially have a trade setup for a long when we go back to this order block again. Similar for the selling side, you have a bearish order block that is developed on the daily time frame. You can see it here. After this candle to the upside, it moved down quite a lot, and here again it moved into the order block, at which it moved quite a lot quickly again. So the next day it already went away, and it stayed away until now. So these two order blocks are the more convincing ones for the complete range. And if we zoom a bit in, here was a bullish order block with the emphasis on was. It tapped in 2 times, but the third time it broke down, and this is potentially a breaker. As you can see here, it moved into the block, but then it moved away, and more as a resistance instead of a support, as we saw earlier. So it's one that might be an important resistance in the near future. And also what we see is that from the mid of April until now, there is a downtrend. Before it was an uptrend, also due to the Russian Ukraine conflict, but the last month it's in a downtrend, but a strong low is formed. And this is also an interesting part. So as you can see, here are lower lows and lower highs formed quite consistently, and after this low a higher high is formed instead of a lower high, and after that a higher low got formed, which potentially could result in a reversal. And for me, what I did is I put an alert here just above the 1 hour range, which would be more for a smaller trade, not for the swing trade per se, but just as an extra thing. But below this 1 hour boundary, there is a fair value gap also developed when price moved away quite a lot to the upside. And what I would like to see here is on the lower time frame, if it visits this whole fair value gap, we can look for a long potentially, given that this daily level would hold as a support. And if not, if price doesn't look like it would go to the fair value gap in the first place, then we might even see a potential trade setup where we can buy long, or we can go long on gold rather, right here. If we assume that there would be a long opportunity on either the level around here, or even at this bullish order block, if we look at the range, at the upper side of the range rather, we see a few interesting things. So first off, there is the value area is more at the upper range of the at the upper part of the range rather, and the point of control is also quite in the middle of this value area. So it would be a place to take profit, given that this wouldn't act as a support, as a resistance. So given that this is not a bearish, not a breaker, so it wouldn't be a bearish thing. If that's the case, then it would be a great place to have a first take profit around these areas. All of this is just hypothetical, simply because we need to check the lower time frame at that particular moment, given that it acts out as I say it does. Another bearish order block that is developed is just above this monthly level, as you can see. Maybe I zoom out and it's a bit more clear. On the 12th hour this was developed. As you can see here, after this small candle to the upside, price moved away quite dramatically, and here same, it went into the order block and then pretty harshly away. So given these two movements, this is a convincing bearish order block to keep in mind, and also potentially to have as the second part of the take profit. Another thing that's quite interesting, of course, for the former take profit, is that the point of control is also in a fair value gap. So given that there is a price imbalance and that the point of control is at the same place, it would mean that there is a higher probability that price will go there, simply because that's where the market probably wants to go to eventually sell a bit more gold to the upside, and probably sell along the way into this bearish order block. This is just a possibility of what might happen. For silver, it's something similar. So there's a similar range. I can zoom out a bit. Well, a big difference is that below this range there is a huge fair value gap. So on the monthly it's especially visible, that silver moved quite a lot. This was 2 years ago as well. It moved quite a lot, and since then it's stayed into a range, as you can see. The fair value gap of the monthly is something that I do keep into account, but for potential longs I will not have such a big stop loss below this fair value gap, simply because this is a bit too much, and I am convinced that on the lower time frame it should be clear sooner when the trade setup would be invalidated. It would be sooner than to have the complete fair value gap in account. One thing that might be a good thing is the weekly fair value gap is also below. It's also a pretty big part after this increase, but it's still a bit better, and it gives a slightly better overview of what happened here. If we look at silver, one thing that happened here is that at the lower boundary of the range, there were equally lows formed, and after those two equal lows, the lows got taken out, so potentially liquidity got pulled out here. However, the reason I'm not in a long yet is because the monthly level hasn't been reclaimed yet. So as you can see, this is also where the bullish order block is. So it's a 12-hour bullish order block, and if we just zoom in here, we can see it getting developed. So after this part it moved away, it tapped quite a lot of times, but then every time it's moved away with quite a lot of conviction, except for the last time. So here as well, here these two times as well, but then at this point it didn't move away with conviction. And for me it's an important thing to have at least the monthly level reclaimed, and ideally to even have the price go visit the fair value gaps, and to, after a pullback, potentially go into a long. So in other words, I want to see more confirmations that price indeed wants to go up for silver, and if they're not there, then I'll simply not take a long at around these levels. If we look at the bearish order blocks that formed earlier, we see at the top of the range a daily bearish order block, and also slightly below. So the idea for me would be more or less, given that there is a possibility here to take a long trade, that we would sell either here or even below this, since there is a fair value gap. But it's all down to how it develops on the lower time frame, and also these fair value gaps, also the way how does it move at these fair value gaps. In other words, does it only go through them and then move downwards again, or does it crush through all those fair value gaps? If it's the latter, then we can see take profits at these levels here, and if it's the former, then we should already be satisfied at the take profit are in the value area, and potentially maybe even at the point of control. So it all comes down to how it develops eventually, but these are the levels to keep in mind given these possible scenarios. For copper, I also excuse me. For copper, I also charted the useful information, but I'm less convinced for a potential range. There is a bullish order block right here on the weekly, which tapped quite well a couple of times. But aside from that, since they're hugely correlated with gold and silver, I am more leaning towards one of those, simply because there is no clear bearish order block. In other words, it would be harder for me to determine where to take profit. It also, of course, at the lower time frame, if the developments are quite clear, then we can check for a long to potentially take profits at the visited fair value gaps. But for now it's a bit unclear, which is why I'm not a big fan to take a swing trade for this. I do have an alert here just above this daily level and just above this bullish order block, simply to to then take into account how the movements go. But as of now, I have no swing trades for copper. In fact, the only trade that I'm currently in is for corn. As you can see, corn had a quite a great uptrend. This was due to the Russia-Ukraine conflict, and the let me see, the bullish order block that's really defining, so to say, is right here. So it's way, so it moved, the price moved away quite a lot. It's not something that I would simply expect to reclaim at all. But the trade I'm in is more a smaller trade, and on the hourly chart it's visible a bit better. As you can see, a range got formed here, and I'm more of a range trader, so I would like to see the price move in the range, price to have certain deviations around the range. And what I did here is I checked the fair value gap that got formed earlier within the deviation here, and I saw that at the upper boundary of the range there was a possibility on the lower time frame to take a short trade, which I did, with taking this fair value gap into account for the stop loss. And after that, what happened is that price moved to the downside quite a lot. There were no signs here that price would reverse and would go back into the range, so to say, which is why I let the price go along. And oh, as we can see, that this is just something I found out right now. Earlier today I was away at the dinner, but I had my trading stop loss just slightly above this fair value gap. So right now I'm not in the trade anymore, but what I simply checked was that this part was no convincing reversal possibility at the lower time frame. This part wasn't either, but since a fair value gap got formed again, I took it into account, and also the fact that I was gone. So I put a trading stop loss just above this fair value gap, and now it got hit, and there is a potential even that there is an upside simply because a higher low got formed here, and there's actually another strong low, so to say, which is formed today. Let me see. It's not something that I'm immediately interested in, simply because I'm more of a range trader instead of following a downtrend or uptrend. Maybe there are some insights I can explain on the higher time frame. The weekly and monthly levels are marked here, but they are quite quite far away from the current price. And if we look at the value area, I believe that for a swing trade, either around this level could be interesting, given that the macroeconomic events are convenient for a long for corn future, or ideally I would even look at this place around this weekly level, just at the value area low, to potentially go for a long swing trade. This is something that we just need to be patient in, just need to have it developed out. But as of right now, I don't see any interesting point to take any action in corn futures. For wheat, it's quite similar. So although you could say that there is a range, it's not a convincing one. These two daily levels are the ones that I marked earlier and that I found important as well. This weekly level was a bit less, was important since the deviation respected it quite well, but aside of that, I think these two daily levels are more important to check, but it's not convincing for a swing trade at all if you just look at it from a technical perspective, which is also the reason I don't do anything with the wheat future. For oil, it's a bit more convincing range. Let me see. On the 4 hour, I think it's more clear. This uptrend at the beginning of the end of the year oh sorry, the uptrend began at the end of the year rather, and it was also due to the Russia-Ukraine conflict, just like most commodities rather. And what we see is that after this uptrend, price ranged with this great deviation. But aside from that, what I am currently looking at is I put an alert just to potentially take a short around these levels, given that the lower time frame supports it as well. So if it plays out, then I'll make another video or I'll tweet about it, just whatever is more convenient for me. And if you look at it, there are a few fair value gaps that are yet to be filled. So this is one, but also this one just below the point of control. And also the question whether the bullish order block would still hold. I do think that the macroeconomic events are convenient for oil. So I'm eventually even more interested in taking a long around these levels. But since we are up here, I'll first look for a short before looking for any long at all, if we just look at oil. I don't look at Brent oil as of yet, and the reason for that is simply due to the huge correlation between the Texas oil and the Brent oil. So there's for me no reason at all to go for Brent or to trade that or whatsoever. If we look at natural gas, it's also one that's surged hugely, but there are no useful ranges for me to trade. This was one I looked at earlier. Maybe I can zoom it in a little bit. I did not take the trade here. I don't remember why, but there was something that, yeah, there was just something that let me decide to not take the trade. But these kind of movements are interesting, especially on the upside, since natural gas is also motivated for longs from a macroeconomic perspective. As of now, it's a pretty ugly looking chart for a range trader, so it's not something I do anything with. But this was, in hindsight, of course, this was one was a good opportunity. So both here and especially here, since it broke out of the range and it still continues. Guys, this is the second part of the analysis on commodities. I just explained about platinum and palladium, but the problem was I choked quite a lot during my explanation. And the reason is simply that English is not my native language. So I was looking for words a bit too much, a bit often, and I noticed that I was rambling and stumbling, so to say, which is not something I wanted to have in my video. Therefore, I tried to explain this. I will try to explain this part again, and this time hopefully not with so many stumbles. So let's go to platinum. I checked platinum and palladium simultaneously, simply because as of lately, especially since the last 2 months, they move quite similarly. And what I notice is that with platinum, the deviations from the downside and the upside are smaller than with palladium, especially the ones from the downside. So as you can see, here is the bullish order block defined, and here the deviations are not that big. But if you look at palladium, it's quite a large deviation, and especially the one at the upside is huge. In other words, if we want to play out the range, there is a high probability that we might get stepped out, or stopped out rather. This is something we want to avoid at all costs. So simply put, since both of them are heavily correlated to each other, I decided to go for looking at platinum and having palladium more on the background. I will check it, of course, but I rather take a potential long trade at platinum instead of palladium. So now the focus is on this particular commodity, and what we see, or at least what I charted, is that I charted 2 point of controls, which is not something by definition. So a point of control simply given a specific time range where there was the most volume at that specific price level. But what was the case was that both price levels, the volume was really large and the difference between those two was so small that I thought that it would be a good idea for a proper insight to have both of them charted instead of just one. One range I looked at for the value area was from September last year until now, and the other one was from January of 2015 until now, more a zoomed out view. And what we see is that the value area of January 15 is almost the same as the complete range, including this deviation on the downside. And if we look at from September last year until now, we see a bit more nuances, because here is the value area and these are only high volume nodes, and with those price levels in between having less volume. So it gives a bit more information, but the overall thing is that price moves quite a lot between these levels. And this is also the range we're looking at. If we look at the bullish order block, as I've said earlier, the deviations are quite small, and the convenient thing is that price moves away quite quickly, especially here. The first time it moves away almost immediately. Second time it took a while, but still moved away. Here it tapped quite quickly and again went right to the upper boundary of the range. And now for the last time, like at these 2 points, I took a long for platinum. The last part on platinum, what I wanted to discuss, in the general view is clear, I think, but I was explaining about a possible long opportunity on platinum. So if we look at platinum as of right now, we see that we're in a bullish order block, and that the bullish order block has the proper support until now, which is a good thing, of course. And also we see that here a low has formed. There was a pretty big deviation. After that, nothing else went into that direction as of yet. I will look at it more on the lower time frame after recording this. I will not do it simultaneously, simply because again, otherwise it would take even longer for me to record because of the English language barrier. So this is something I will add either at the end of the video, or I will explain that there is nothing interesting yet on lower time frame. But this is something that I'll probably add the more precise analysis just at the end of the video. All right, moving on to soybean. Since palladium, I already discussed that it would be it would just move too similarly to platinum. So going to soybean, after this huge surge to the upside, we see that it ranges quite well until now, and what we see is a potential, and I'm just saying with a bit of caution, a potential for a short. This is not a favorable thing from a macroeconomic standpoint, but on a technical level there is a possibility for a short. And the thing I did is I put an alert just below the value area high. And the primary reason at the beginning was to have this fair value gap visited. It already got visited during this day, which is unfortunate. So it's a bit less favorite for me to go for a short, but I will still look at it again if price moves again to the value area high. And also what we do have to keep in mind for a short is that there are equal highs formed earlier, which is at the daily level here. It's not a favorable thing, again, because of the macroeconomic standpoint, the fact that the fair value gap here is visited and that equal highs are there, so potentially they can get taken out before going low again. But it's still an alert, it's still something to keep in mind for myself. More favorably would be for me to go for a long at the weekly level here, maybe even at the value area low, but ideally just to have the range continued. It would be great if the weekly level got supported or works as a support once again. It's something, let me just add that as an alert. Would be good thing. Would be the more favorable trade if I compare it to a short, but still I think both of them could be interesting, with the emphasis on could be. If I look at cotton, I have marked the levels here, but there is not a favorable trade for myself, so it's not really moving in a range. Here it looked like it would go on a downtrend potentially, but it's not something interesting for me to take. Also on the fair value gap here, there was no volume imbalance, otherwise I might have looked for a potential long until that point, or for a short after reaching this point, but it wasn't. And again, it's not for me, it's not a range, so not an interesting commodity, not yet at least. If we look at sugar also moves in a range, and this is from the daily level until this particular daily level, and especially this one is interesting as a resistance since it worked as such already 5 times. Something that's for me to keep in mind, and I already placed an alert. Same thing with the others. If the lower time frame supports the idea for a short, then I will let you guys know. I will give an update, and then we potentially might profit from this trade. But for now, it's just simply something I'll have to wait. And at the first place, it's something that price even has to visit before going for a potential short. Oh, let me just 1 second. Just look at the lower time frame. Maybe there was something interesting. This price level would also be an interesting place to go for a long. So maybe I'll just add an alert. That was it, yeah. Right, going at cacao, we see that there are a few price levels interesting. These two, daily and weekly level. These two, the monthly and the daily. And if you look at the monthly even, it's also in a bearish order block. And you see from 2018 until now, it got sold quite a lot at those points, as you can see. So it would potentially be a great place either for a short or for a take profit if we are in a long position beforehand. And if you look at the bullish order blocks, there are two that are interesting. This one in particular, as you can see, it moved in after moving away 2 times, and with conviction it moved away. So it's a great bullish order block, but it's already let me see how many percent. Price has to come down almost 16% before we can even enter a long like this. So it's not something under radar as of now. The other bullish order block is a bit more close to us. It's this one, and we can see how it got formed on the weekly. Here you can see that price moved away. Here it moved away with a small conviction, and here, despite the deviation, it did move away with pretty great conviction here especially, and also here. So it's a great bullish order block to have in mind. And what I wanted to see was the fair value gap being visited, especially since there's also a volume imbalance. So I can just check. Here you can see that when the fair value gap was formed, there was a volume imbalance. So it's quite a lot of buying volume, and that results in a higher probability of the price going back to it. Alright, so the last 2 commodities in this list, aluminum and orange juice, are not ones that are particularly interesting right now. The reason for it is simply because they do not move in a range at all. And again, since the ranges are a bit more my trading's edge, or at least everything around it, I do focus on these, especially without any order flow data. This is something for me to always have in mind. And with these 2, there are no particular trades for me to even consider, which is why I'm not going through it. Maybe just for orange juice, these are the levels that I'm looking at, these weekly and daily levels. Oh, let me see. Maybe this as an overview is interesting. But again, aside from that, there is no particular trade for me to take, at least not for a swing trade. And if there is any lower time frame range that is formed, excuse me, if there's any lower time frame change that is formed, then I may give you guys an update, but I haven't seen one yet, which is why I'm not going through these. Alright, so I'll look at platinum now. I'll look at it from a lower time frame, and if I see anything interesting, then I'll add to the video, and if not, I'll also add to this video that yeah, it was a lack of anything interesting, and maybe in the future there will be. Alright, so I looked at platinum on the lower time frame, and there were a few things that I considered. There was only one good thing for making an argument to go for a long, namely that there was a V-shaped reversal visible on the 15-minute time frame and also on the even lower time frame. So with that V-shaped reversal, there would be a potential to go for a long. However, the reason I did not go for a long yet are a few reasons. So first off, if you look at a potential stop loss, you see that during the last deviation you would need to look at the lower daily level. However, that lower daily level would be a potentially a big stop loss, and the reason for that is if you look at the upper level that acted as a resistance, there was a 2-hour level that I just showed earlier before I made this recording, that at which price tend to stagnate, and it's even more visible on the lower time frame. So what happened from the 18th of May until now is that price simply tend to stagnate and tend to go to a resistance on that particular 2-hour level, and I call it 2-hour level because at the 2-hour time frame it's even better visible. So when taking that into regard, even though if I would take it long, then I would even have a specific take profit or whatsoever around that level, but the problem is then that the risk to reward would be just too bad, because if I take the lower daily level into account as for the stop loss, then the risk to reward would be way below 1, which is a terrible thing, because the win rate wouldn't be that high to compensate for it, especially not since platinum, if you look at the V-shaped reversal, although there is technically a V-shaped reversal, the last pivot point or last potential forming of the pivot point is not that high that you can say that we completely reversed. So it's not a convincing trade for me to take, not yet at least. So one thing I might look at is if it goes indeed to the 2-hour resistance, but then it stagnates quite quickly in the bullish order block and then moves away, then it's a good thing. That's the moment when I probably will take a long trade, but for now I won't, simply because the risk to reward would be too bad. Because if I look at the other weekly level, then if you take that as a stop loss, the chance of getting triggered out would be too great. That also happened a few hours ago, that price would be just below that weekly level and you would have been taken out. So if you look at it from a risk to reward perspective, it's a pretty terrible trade to take, and this is also why I decide not to go for this. Thank you guys for watching this video, which was the very first public analysis on commodities from Trias Traders. If you like this video, please like, share and subscribe on Trias Traders, and I will see you guys on the next video.